Today I'm going to talk about how to pick which pair to trade. I'm going to go over how to pick each pair, how to test each pair, and overall what I did when I was picking the pairs to trade and spend most of my time focusing on. I have done a couple videos on the channel previously about why I think only trading one pair or a couple of pairs is the best. And we're just going to start off this video talking a little bit about that and why I think you should only really focus on one or two pairs rather than having a full watch list of every single Forex pair, every single indice, every single metal. You know, it can just get full and it can pretty much lead to you missing setups, not actually having a good idea about why that pair is moving, when it moves, and how you can catch each move on that pair. But if you're focusing on just one or two pairs, you always know where that price is, where that price was last week, where that price was last month, maybe even this time last year. What was this pair doing? And if you've got all that knowledge, you know that, okay, often previous data repeats itself. So what could we see happen here? What could we see happen when this happens and this and this and this? And that's what you can learn from pretty much focusing on one or two pairs. Obviously, you don't have to stick to one, because I personally trade two pairs. I trade gold and I trade GBP USD, so pound to the US dollar. And the reason I actually did this was, initially I started off with trading gold only. This was because when I started trading, you know, around 3 years ago when I was 16, the first pair I traded was gold. And I saw these big movements, these big pip movements, and I wanted to catch those. I wanted to be in those moves. So then for the past 3 years, I've just been trading gold pretty much solely. And I've tried other pairs. You know, I used to trade GA a bit, tried AU, you know, made profit on some of these pairs. But overall, I've kind of just always stuck with gold. Recently, the past few months, I have actually added GU. And the reason for this was because when I'm trading gold, often when there's no setups, it can be quite boring. I know you got to stay patient, wait for the perfect setup, but I only trade gold in New York session. So I was thinking, how can I make the most of the time I have on the charts? Find a pair to trade in London session. So when I actually was looking at the pairs to trade, I did loads of testing. And in this testing, the way I went about it was pick a pair, test it in London session, and see what happens. So what I did was I got a spreadsheet. I might go through the spreadsheet, might not, but I got the spreadsheet and pretty much had different criteria along the top, which obviously I'd fill out as it goes along. And I do 100 trades with each confluence. So let's say you have one confluence here and you buy when this confluence happens. Okay, perfect. You have another one, another one, another one. And each confluence you test for 50 to 100 trades. So you get a good idea of, does this confluence work on this particular pair? And if it does, perfect. You can then start merging them together, all the confluences, and see how it works using all of the confluences, how you would normally trade. However, if these certain confluences don't work in that session, when you can actually trade, when you can actually spend time on the charts and make the most of your analysis and the most of your time, get rid of that pair. You know, I was trying to trade AU as well. So the same time I was trying to figure out GU, I was trying to do AU as well. So out of these two pairs, from the testing I did, from the forward testing as well. So forward testing, if you don't know, is pretty much live price right now. Let's say I mark something up and I want to see what's going to happen in the future. You don't just click, back testing, done. Nope, you see what's going to happen in the future, but you don't actually trade it. Because obviously if you're testing something, you don't want to go straight onto live money, because you could just lose loads of money from something you haven't even tested and it's not even in your trading plan yet. So that is the good thing about forward testing. You can just put it on your chart, and because it's not really a pair you trade at the moment, it doesn't really matter, and you can learn a lot from this. Obviously, when I switched from gold to AU, well, not switched, but added it in, I was aiming to trade the same sort of strategy. Had to make certain adjustments. Obviously, stop loss size is a big thing. Gold, I like to use 10 to 20, maybe 25 pips maximum stop loss size, whereas with GU, I never go above 10 pip stop loss. That's kind of my rule, never above 10 pips. So you kind of got to notice that, okay, there's going to be certain things which are going to be different because I'm obviously trading a different pair, and then you can start to see this from your testing. The main thing I'd say is you have to know when you're going to be able to trade. You have to know when you're going to be able to spend most of your time on the charts. Maybe you have a job in the morning, or you do a part-time job in the morning, but you can be at home on the charts for New York session. This is if you're in the UK. Obviously it's different around the world. You're going to be able to trade different sessions because of the time zones, but there's always a session you'll be able to trade, whether it's Tokyo, New York, London. There's going to be a session which you'll be able to spend your time at the charts. Or if not, and you just have to make do with, pretty much any time, then you can focus maybe on swing trading and pick a pair for that sort of style. Also, you want to kind of pick a session where that pair has the most volatility. Volatility obviously means more movement in the markets and more chance of profit being made. So let's say I'll trade in London session, I'm going to want to pick maybe a pound pair, like GBP USD, Euro pound. These move quite nicely in that London session, so that is why I picked GU as the main sort of pair I was going to actually look to trade in this London session, which I had free to trade. Next, you've got to take into account your trading style. If you're a scalper, if you are a day trader or an intraday trader, you're probably going to want a pair with maybe higher volatility, so you can be in and out of the markets with a decent sized move that doesn't take a week to set up. You don't really want to wait a week for 100 pips when you could pick a pair that moves 100 pips, every session or every day, that pip range. So you kind of got to take into account, okay, is this pair going to work for my scalping? If you're a scalper, is this pair going to work for my swing trading? If you are actually a swing trader. So you kind of got to take this into account when you're actually looking at the pairs. Look at the daily pip range, look at, okay, how much movement is there in a session I can trade. If it's not a lot, you can't obviously make as much profit. Obviously you can use smaller stop loss sizes if it's less volatile, but then also your TP will be shorter as well. So you kind of got to kind of just pick which one's best for yourself. Let's say you narrow it down to 5 pairs which you actually want to trade. This is when the backtesting comes in. So as I mentioned at the start, you do that 100 trades for each confluence, and then you can kind of tell, okay, this pair's good, this pair's not so good, and then you get rid of the ones which don't really work with your trading plan. They might work, but they might not work in the session you actually want to trade, which is obviously very, very important, because you don't want to be sat at the charts all day staring at the price moving pip by pip, when you could just be out doing something else, maybe in the gym, meeting up with people, I don't know, whatever, back testing, and then okay, it's 2 o'clock or it's 8 a.m. Now I need to be on the charts to focus on my trading, to do your analysis for the day. And then what you want to do with this, do your analysis. If price is in an area where you could potentially look at a trade, perfect, set an alert. And then that's what I do. I set an alert once I've done my analysis at that certain time, and then I go about my day again. If the alert goes off, perfect, I can look at the charts because it's in an area I want to trade from. However, if you've got 5, 10, 15, 20 pairs and you have all these alerts going off, well, what if every single pair you have, the trade alert goes off at the same time and you have to enter that trade? Well, you could enter 20 trades at once if they all happen. I know it's unrealistic, but it could happen. All those trade setups could happen at the exact same time. Would you be able to enter 20 trades at once? Probably not. And if you wouldn't enter 20 trades at once, how would you pick which setup you would actually take? Which pair would you choose out of those 20 to actually enter the trades? Because obviously if you've got a trading plan, you'll have that certain loss limit. So let's say you only want to lose 3% in a day, well then 17 of those setups you can't take. Whereas if you just have 1 or 2 pairs, you know that, okay, if everything sets up both perfectly on both of these pairs, the max I can lose in a day is 2%. And that's fine. 2%, isn't really a lot in the grand schemes of things, looking at risk to reward. And then once you have actually picked 1 or 2 pairs which you actually want to trade, this is when you can implement more backtesting, more data collection, so you know what happens at this time, which confluences work, which entries work for my plan on this particular pair. Then you can implement the forward testing to see, okay, backtesting can be a little bit easy. I know it technically is the exact same, but forward testing I'd say is more realistic. Or let's say just trading on a smaller account size. Let's say you're trading FTMO, you don't really want to go straight in with a new strategy or a new pair straight away. You want to maybe test it on a smaller account, so then you're still getting the benefits of actually trading a live account. If it's profitable, you still make money. And then obviously the more data you collect, the better your results will be on this particular pair. Myself personally, I have hundreds and hundreds of trades on gold, on GU, and even on AU. Even though I don't trade the pair, I still have so much data on it because I was testing to see if it works for my strategy. Let's say I want to start trading AU. I have all this data now. I have hundreds of trades back tested, why I entered, which day of the week I entered, what time did I enter, what happened when I entered, what happened during the trade, screenshots before and after. If you've got all this data, you can look back. You can look back And if you're still journaling the forward trades as well, so let's say you're live trading now, if you're journaling them the same, you can also note down what happens to your mindset, what do you feel when you're in the trade? Did you feel like closing early? Did you close early? And why did you actually do these things? And then you can learn from that, and it'll also help the technicals too. Like I've said in previous videos, I don't believe technicals are actually the hardest part in trading. I'd say psychology is actually the hardest part. So noting this down also alongside the technicals will definitely benefit you in the long term with your trading. So if you guys did enjoy this video, and maybe you can now implement it into your own trading to stop focusing on 20-30 pairs and narrowing it down to those 1 or 2 pairs which you can actually master, that is when you can actually start to make a lot of profit, catch every single move, because you know exactly what's going to happen, you know exactly where price is all the time, and then you can hopefully make a lot of profit. So without further ado, I'll catch you guys next time.